Do you think that some of the issues that you raise in that story are going to come out on the conference call today?
I think investors are really looking for some kind of clarity and insight, as Julia just mentioned, to how Disney is reconfiguring a large part of its the entertainment, the filmed entertainment side of its business, to adjust to their very ambitious plan to launch a global streaming service. They've talked about it for more than a year, but they really haven't put a lot of hard numbers around it, and I think that's where the pressure is coming on them right now.
But do you think the expectation is that they will come out with hard numbers, or do you think it's still going to be just suggestive of where they are? And do you think that this product will actually launch by the end of the year?
I think that there will be some hard numbers because they reconfigured their earnings reporting strategy around this new DirecTV and international segment. So we will see some hard numbers. Disney has also set an investor day for April 11th. So I don't think you're going to see a ton of data, the data that Wall Street and analysts really want to get their hands on in terms of how much they're going to spend on original content, how much traditional revenue they're going to forego as they build up their streaming platform. There's a lot of spinning plates there right now. But I think that we'll get something today. We'll get more in April.
And Cynthia, though, that is a central question, which is how much flexibility do you think the Disney investor base is actually going to give Disney to spend the kind of money and as you just mentioned, in some cases, forego revenue that they were getting from other streaming services to invest longer term in their own?
Right. I mean, it's a really tricky balance that Disney is trying to get through right now. I think there's a lot of respect out there that Disney is using its market power and its unparalleled collection of assets and intellectual property to build a better mousetrap, if you will, having seen that how much consumers embrace the Netflix model. Disney is looking in that direction. But for a company of Disney's size, that means a lot of reconfiguring, a lot of changing deals that had been very profitable for them in terms of how they sold their TV shows and movies. Now that's changing, and in that change is going to be seemingly at least a couple of years of a real drag on earnings. And as you say, the question of how patient investors will be is really going to be the big question around the company for the next couple of years.
I guess the other way to cast that, Cynthia, is that Disney has these multiple transitions going on, buying the Fox assets and obviously going direct to consumer. It changes the storyline from, gee, how many more franchise Marvel releases can you possibly have next year, and the studio operations, as well as the gradual erosion at ESPN. So it's almost as if they can kind of tell their own story how they wish to right now, as opposed to listening to the old concerns.
That's true. And as you point out, there is so much going on inside Disney right now, building a new division, launching a global platform, integrating a gigantic purchase of a lot of assets and people that will be literally going across town from the Fox lot to Disney in the next couple of months. And by the way, there's also a search on for a CEO successor to Bob Iger. There is a lot going on at Disney right now.
Cynthia, speak to that. I know it's a Time Warner property to call it Game of Thrones, but there is a bit of a suggestion that a Game of Thrones is taking place inside of Disney this time around. And just explain both who the two players are that seem to be in line, but how their relationship or lack of relationship in terms of that battle may ultimately impact the business.
Well, I mean, the search to succeed Bob Iger has been ongoing for years. They've had a couple of false starts with people. Bob Iger has extended his deal to stay with the company now 3 times. He's obviously a very tough act to follow. There are right now 2 executives with a lot of power within Disney. Kevin Mayer, who is running the direct-to-consumer unit, which Iger has identified as the highest priority of the company. There's a new team coming in from Fox executives led by Peter Rice, who is a longtime Fox executive. Rice is a very highly regarded executive. Rice's name was mentioned, was rumored as a potential successor for Iger long before Disney bought 21st Century Fox. So there's certainly been no formal designation of heir apparents, but when you have people of that caliber joining an entity, and you have Iger handing Kevin Mayer the keys to a very important division, it's kind of natural in Hollywood circles that you're going to get some gossip about who's in, who's out, who might be the heir apparent. There's nothing official from Disney yet, but Iger has said he's going to step down in another 2.5 years when his most recent contract extension is up. So clearly, it's got to be something that the board is looking at very hard right now.